welcome to the weekend edition. My name is Peter Reznicek from ShadowTrader.net. We got a lot to talk about this week. The markets didn't really move all that much from Monday to Friday, but Bitcoin broke out. We're going to delve into that chart in some detail and talk about why I feel that it definitely has more room to go, even though we've rallied pretty hard over the last couple of days. Definitely going to do a sector watch that I think is going to underpin what I was talking about in terms of the market not really moving too much. A lot of divergence this week that we haven't seen before in terms of tech versus financials, etc. We'll get into all of that. I've got a number one draft pick for you today, which is a stock that I guarantee you've definitely heard of, but one that you would not expect is as weak as it's been this week. But I think that's a buying opportunity on down the line, right? All that and much more in today's weekend edition. As always, the point of this program is to look forward to get a handle on where these markets and certain instruments might actually trade next week. But that being said, we always like to start the week with just a little peek backwards to see how things acted from Monday's open to Friday's close. And that's a really important distinction to make, is that I am very interested only in tradable activity, not really taking into consideration gaps. So if there was a gap from last weekend to Monday, you're not going to see that in these numbers, because these are the percentage changes of everything I'm showing you here from Monday's open to Friday's close. And you can clearly see that the numbers support everything I was saying in the intro, that we didn't move much in the broad market at all, but there was a lot of divergence in between the sectors, which we're going to delve deeper into when we do the sector watch. But these numbers really tell the tale in that look at how flat the majors were, especially the S&P, which literally went up 1 basis point between Monday's open and Friday's close. NASDAQ lost a little bit, less than 1/3 of 1%, and the Russell was also basically flat, like 12 basis down, nothing happened. But the sectors really had a lot of divergence. Like you can see, like technology, which basically is 1/3 of the S&P, barely budged. It was down 5 basis, but at the same time, XLF, which is financials, they were down 2%. That's the second largest weight in the S&P, taking up about 14% of the market currently. Remember, these weights move and shift every month, and it always gets rebalanced on the last day of the month. You have to make the change. And so that's interesting just in and of itself, that these two sectors had so much divergence, because they really are the major drivers, I would say, of the market. Now, beyond those first two, you can see across the board that the divergence continues, although these are not as important. Remember, as you move down the chain from starting with technology rather, going to financials, going to healthcare, discretionary, etc., moving down, obviously there's less and less weight, but you still see the same divergence over and over, where, like, for instance, communications had a really negative week, but discretionary was quite strong. And by the same token, staples were down quite a bit, right? These are very interesting. They often will move opposite and give us kind of an idea on the strength or weakness of the market, or, you know, how people feel, kind of a sentiment thing to me whenever you have, you know, how staples move, how discretionary moves, etc. Energy had a good week. Utilities had a decent week as well. And then the last two small sectors here, materials had a good week, probably on the heels of, you know, gold being relatively firm, and real estate was down a little bit. Bonds down a little bit. Yields went up. That makes sense. They're always inverse. Volatility collapsed because we had a new all-time high this week, which makes sense. Gold, as I was saying, held its own. Oil up pretty sharply, which kind of translated into that XLE movement. And of course, the big story of the week is all the way here, last but certainly not least, Bitcoin up another 8% this week, which is really, really firm gain. And we're going to get deeper into the Bitcoin charts later in the program. But for now, that is our weekend review. And onto the charts. What's really going on? Some people tell me it's the most important segment of the show. I kind of tend to think so, right? I mean, it's the major averages on the dailies and the weeklies, where we've been, and more importantly, will the charts be telling us where we could go? And the charts obviously didn't move a whole lot from Monday to Friday, which is leaving some dojis on the weeklies. And if I can just give you one takeaway from this part of the program and the sector watch that we're going to get into shortly, I would say that the market not only didn't move this week, but I think there is potential for the market to either not move for a little while, at least until we kind of move deeper into earnings season, which is coming up soon, right? We know we've got Q2 numbers starting to hit next week with Netflix in the middle of the week. That's going to be important. But at least up until there, I think the market has potential to do a little bit of sideways action. Let's take a look at these charts. S&P, again, as I was saying, flat on the weekly right here. That's the doji. You can kind of see it right there. And let's flip down now to the smaller time frame on the daily. And we can clearly see that we did make a new all-time high this week. We notched it right there on Thursday and then backed off. But again, if you look at the collective action of these 5 days here from where we opened on Monday, which would be here, we didn't really move all that much, not a whole lot happening. Now, my key takeaway technically from this action on the dailies has to be all about the 8 EMA, because we are riding it. We've literally spent most of the days this week testing it, and there was weakness early on in today's session on Friday the 11th, and once again, notice, where did it bounce? Dead on it. And at some point, you're going to get a breach here, and which will probably bring prices slightly lower. And that's why I was thinking that there's potential that the market is going to be sideways to down next week. Look at the perfect touch here on this Friday at the low of the 8. But more importantly, again, here's 1. I don't know if that's 2, but this is, I think you could kind of call this one 3 maybe. But, you know, maybe if they're not really touching, I want to be as accurate as possible. They're still just kind of riding along here as opposed to this action. Notice how much more bullish it is. You can see how much more separation there is here between the price action and the 8 EMA. Even here where you get a touch, again, big like kind of separation where you're nowhere near it. And then you go into this consolidation area where you're trading on both sides of the 8. That, by the way, is a good tell in that when you have price action on either side of a trend line, just like I always tell my people in my weekly options room, that if you trade back and forth through the open multiple times during a session, you're probably not going anywhere. Well, it's the exact same thing. If we breach this 8 next week, one of the things you want to be looking for is, will there be a confirmed daily close below the 8? And then will that continue the next day where you actually move lower? For instance, right? Look at this bar right here going back. Confirmed daily close below the 8, but was there any follow through the next day? Absolutely not. As a matter of fact, it was dead opposite, because the next day's session actually closed firmly above, then closed below, then another day that closes below, but I don't even think it made a lower low, maybe just by a little hint. Another close below, but again, didn't really go anywhere. And what happens the next day? Big close above. So that's what I want you to be watching for next week, basically, is how is this market going to interact with this 8-period moving average? Should it breach below it? And that price action, how it acts, is going to tell you a lot about the nature of the market going forward. Let's switch this over to the NASDAQ 100 real quick. The weekly chart basically looks the same. The only difference is that the all-time high was made a little bit earlier in the week. It was made on Wednesday as opposed to Thursday. But again, and that distance between where we are and the moving average, I think it's even smaller here in the NASDAQ 100. Look at the chart here, because there were more days here that I think actually interacted as they had some relative weakness. Like I would call this an almost, but look at Thursday. Thursday actually tested, which is really what makes this price action somewhat of a head scratcher, that you would think, okay, with the weakness on Friday that you would break, but it wasn't enough. There just weren't any sellers in the market. So I'm going to give you the same prescription going forward in the NDX that I just gave you in the SPX. Same things you need to be looking for. Watch that 8 EMA closely this coming week and see what type of price action we get. A simple thing to look at is also simply just the size of the candles. Do you get an expansion of range or not? In that consolidation area that I talked about earlier, there was never an expansion of range here, right? Like there's no candle here that you can point to that's like big body in the downside direction. It just wasn't. There really wasn't much going on. So that's also another thing we want to watch for. If we get that type of action where we do the same thing we did last time, where we just floated our way down to the 21, then it's going to be a buy setup going forward, right? So we may have the same thing here, just sort of floating our way until this 21 catches up, and then that would be a good buying opportunity once again for the market. Well, let's move into a little sector watch here. Usually what I do in this segment of the program is I'll highlight one of the 11 S&P sectors, because I think that it may be setting up for a trade, so that you can look at the individual stocks inside of that sector, or maybe even the ETF for that sector, and do a trade on it next week. But in this particular case, we're going to actually go through a number of the sectors, because I want to sort of support my thesis that I think the market may be on pause here for a little bit, at the very least for the next few days, like I said, because We are going to get Netflix earnings middle of next week that is going to kick off the Q2 earnings season. But look at this divergence here in terms of, I just want to start with this XLK, which is the obvious place to start because it's the most heavyweight sector. This one is also hugging the 8 and has come down to it. So there's potential of a break that would take it down to the 21. But in direct contrast to financials that have already broken the 8. And this is kind of more noteworthy than you would think. You may think, oh, this is very just, granular and minutia, but not really, because our job is really to get ahead of the moves in the market and, more importantly, position ourselves accordingly with when the market is aggressively moving in one direction or other, or not doing much of anything. And in the weekly options world, which is the sandbox, so to speak, that I play in, it's extremely important to constantly be aligning your trades with the broad market. That's really what I always am most proud of, for lack of a better word, is that's really what I'm selling, right? I run an advisory and I have my own room and I do live trades every single day, and I cut and paste them from actual fills from a real money cash account, and I keep track of the P&L of all of those trades. We're up to almost 2,000 trades now over a number of years. And the P&L is, moving from lower left to upper right, which is as it should be. And I think this is a very, very important thing to talk about if you do run an advisory, because that's what I think everybody should be doing, but most people don't do it like that, right? But regardless, you achieve a certain level of consistency in this market, really, I believe, only by being constantly in lockstep with what the broad market is doing. It doesn't have to be exactly, it's not like you're going to catch every single turn, but when the market is moving up, you're putting on bullish trades, and when the market is moving down, you're putting on bearish trades. And when the market has propensity to move sideways, you will try to do your best to put on those type of trades, for instance, that are not directionally biased, but will be more of a credit collection type of strategy, rather than be betting on direction in the market, because you will find over time that you absolutely positively need the broad market about 9 times out of 10 to power your trades. Of course, there's going to be outliers. We saw that this week in Bitcoin related names, MSTR, Coinbase, etc. Of course, those outliers exist, but in general, you're not always going to be in those names. You're going to be choosing from a broader selection of stocks, and those stocks are going to be about 85 to 90% following the broad market. So this is the reason really why I spend so much time on this in these videos, and it's a lot of what I talk about every day in my room. We're constantly going over market internals and context and looking for clues that are going to tell us what this market is going to be doing, and I'm constantly reporting that live in real time. So XLF, as I was just saying a moment ago, is actually below the 8. And that's what I was getting to a moment ago, is just saying that divergence that you have, the two strongest sectors, one above the 8, one below, one appears to be holding its own, one appears to be moving down. That is a recipe for more chop if that type of divergence continues. So just keep that in mind. Okay, let's continue to move down. After XLF comes healthcare, XLV. This used to be the second largest sector for a long time, but it's been weakened over time, and because it's all weighted according to capitalization, right, you can see that it's actually moved down so much for a long period of time, and that's what's kind of caused the switch where it's no longer as heavily weighted in the S&P, and financials have kind of taken over that mantle. So this is dead sideways, and remember, this healthcare is 9.3% of the market, and it really hasn't moved. And look at how it's in the middle of this range, which has been in for a while. There was difficulty breaking out over this level, which then failed. This level here had difficulty getting below. And as I always say, when you box it off and you look at whether it's middle, you cut it into thirds, so to speak, where are you? Are you in the middle third, upper third, lower third? You're just kind of right above the middle there, and it's not doing anything. So this 9.3% of the market, which is a decent amount, is not going to help you much, and it doesn't look like that's going to change anytime soon. After that, we get into consumer discretionary, which is XLY. This is a little bit more bullish. This sector looks pretty good. This is currently 10.4% of the market. So I apologize, actually. I've got to make that flip because I have it flipped on my chart over here that I keep looking at. Healthcare should not have been third. Healthcare should be fourth. Consumer discretionary is actually a bigger weight than healthcare. But it's actually interesting, though, because while we're on the subject, notice that the two of them are relatively similar in weight. Consumer discretionary is 10.4, but healthcare is 9.3. So 1/5 of the market is made up of these two sectors, right? Think about that. And they're kind of moving opposite each other. Like just today on Friday, which was a relatively two-sided day, healthcare was down 0.5%, 48 basis, and consumer discretionary was up 0.25%, 26 basis. So therein, think about that. You've got 20% of the market just in these two sectors, and a little bit of divergence there as well. Let's go into industrials, which is 8.6, quite strong, looks good. Just made that new high on Thursday with everything else. And let's wrap it up with communications and staples. We're not going to go through all of them. Communications is also almost 10% of the market. Again, my weights are kind of out of sync. I apologize for that. I'll make the change in terms of which ones are the highest weighted. But again, 10% of the market, and what's it doing? It's moving down. We talked a lot earlier about being above or below the 8, above or below the 21. We're clearly below the 8 on this, and we're testing the 21 now in communications. And last but not least, of course, is staples. And staples are about 5.5% of the market. And are they going anywhere? I would say not. So this 5% of the market, think of it that way. Is it helping or hurting you? It's kind of doing neither. We talked about the dividing into thirds, and it's pretty much, boom, dead in the middle. You're just kind of right there, okay? So that's our sector watch for today. It's basically just, I don't see a play here in anything. Maybe if you're aggressive, see how that communications plays out on Monday morning, because it could be a nice right or right out in that you could get in and you have a very, very clear spot of where you're going to get out, because you know that if the communications as a whole, as the group, loses that 8 EMA, then the stock that you chose in that sector or choosing the XLC ETF is not the one to play, or is the one that you played, and it moves down below that 21, then you've got a clear area where you should be enforcing a stop loss. All right, that's our sector watch for this week. Okay, let's talk about Bitcoin. This could be looked at as like our lead story this week. I'm putting it under the heading of alert of the week because I did put out an alert to my room exactly when I was buying Bitcoin contracts, and it was kind of right at the breakout point. And I'm going to go over that analysis in terms of why I chose that area, and obviously where I think Bitcoin is going in the future, how far I think this breakout could go. But I wanted to start on this particular slide here because it's important, and I was very surprised that nobody's been talking about this. I actually posted this slide right here on my social to my X feed. You can see my handle is right there below if you want to follow me on X. This was a snapshot that I took on Friday morning, July 11th, and the reason that I think it's important is it was the first time in a while that I noted that Bitcoin was actually decoupling from the market. I've been feeling for a long time that Bitcoin is really a risk asset, and it just moves with the market. Whatever the S&P does, for the most part, it's not in lockstep, but it just goes up and down with the market. And this morning, that situation had really, really changed. We woke up today to a gap down in the markets on some tariff news. And you can see how before the market opened, when I took the picture, S&Ps were down about 36 points right here, and NQs were down about 110. It was more than that at the lows of the overnight session, but this just happens to be when I took the picture. And at the same time, Bitcoin was trading up over 4,000 points at the same time. So the things were finally moving in opposite directions, which I find to be very, very interesting. And I think this bodes well and is bullish for Bitcoin going forward. As far as the actual alert is concerned, this is what I posted a couple of days ago. You can see all this stuff in my room that I do in terms of the live trades that I do with my subscribers. It's all time stamped and it's all happening in real time. And whenever I make it like an official call, which is almost all of them, everything gets its own little trade number. And these are cut and pastes from actual fills from a real money account. This that I did here on the futures of Bitcoin, obviously because we're a weekly options room, I did not give it a trade number. It's not a official call, but I do this often where I'll tell people exactly what I'm doing in the futures market. I do it for the ES, I do it for gold futures contracts, and I do it for Bitcoin. And you can be sure that when I say I'm doing something, I'm definitely doing it. So this was Bitcoin futures at exactly 112,000. We're going to get into the chart exactly why that was. with another add over the all-time high, which was actually very, very close to that level. We weren't really all that far away from it. As you can see, that was put out a couple days ago, just before the close at about 3:49 p.m. So let's take a look at the Bitcoin chart and where I see it right now, why I think it could actually move higher from here, and how high I think we could actually go. To really drill down on the entry, you have to chart the exact futures contract that you're in and not a continuous contract. And so for me, this is why that signal was at 112,000 exactly, because I was looking and charting the actual contract that we're in right now in Bitcoin futures, which is the BTC N25 up here. And if you mouse over some of these areas, you'll notice exactly where the highs are. This high right here is 111,280. The next day it was 111,025. This high was 111,220. And this high went as high as 112,590. So this is why a couple days ago, the 112 area, which was right here on this particular bar, was my entry. I just felt it made perfect sense to do it at 112, and then the next one was here. I called this the, whatever was that all-time high, it pushed up a bit further. As that was happening, notice what happened here is that when price went down here, there was a lack of pinch. This is something I was looking at, that in a weaker market, stock, instrument, ETF, whatever you want to call it, there would be a pinch of that 8 going below the 20. 21, it didn't happen. So it felt to me like all of this was really just building up a lot of pressure for a bigger move, and it was just a question of when was it actually going to break. And you can see here that the 8 EMA started moving to the upside, sort of bending upwards this way. And that's why I thought, okay, this is it. We're definitely going to go here. I had been long Bitcoin contracts before, but mostly only for quick hits because it wasn't really going anywhere. So what I would do is I would kind of, get long on a pullback. If I was wrong, I would add to the position, but then I would be getting out for small gains. And during this whole time period, that seemed to be the right move because we never really broke. But this feels to me like it's different now because you're clearly taking out these levels and it's just kind of moving in the right direction. So that being said, let's move over to the continuous contract and check out where I think things could be going. Let's clear all these drawings from it. And I want to just point out the last couple of moves that were made in Bitcoin in terms of from the breakout to the move right here. That would be this move, and then this move from this low to this move. All right, and this is kind of important. Look at the low right here, and I've got this written down on another piece of paper. That low should be 67,140 if I've got it right. Yes, correct. 167,140 up to this high here. And I wrote down that this move here is exactly 62%. So that's kind of noteworthy. And then if you do the same exact thing from this low to this high, that move is exactly 50%. So wouldn't it make sense? And both of these really have kind of the same characteristics, if you will, of the other break. Like here you have a high, and here you have a high, and once you make the clean break, it's off to the races and you get the 62%. This is a long consolidation. And where does the break occur? Well, I would say the break is, and I'll draw it on a straight line so it's much cleaner, I would say the break has to be here as you break the downtrend line. It's not a horizontal breakout like we just had here, but it's definitely valid. I mean, this happens all the time in the market, that a downtrend is defined by the downward channel connecting the highs and the lows, and then you break and you start to go. And that move, I'm measuring from the low of where it started, is a 50% move. Very, very interesting. So could we have a 50% move in this move? It's certainly possible, which if you do the math, takes you to 148,000 and 500, or 148,000 even, basically, just about 448,000, which is interesting. That's going to take a little bit of time to happen, but there's no reason why that can't occur over time. You can see here, I've already put a limit order out for half the position here, just because for me, it's kind of a trade. Remember, I'm not a Bitcoin maximalist. I'm not one of these people that's like, oh, it's going to a million or whatever. I'm fine with a 10,000 point move on half the position, and then I'm going to basically trail my stop probably underneath the low of each bar, or I'm going to draw this trend line probably from here, and I'm going to see if we hold trend, and then I'm going to see just how far it can go. Because honestly, that 122 is very, very arbitrary. It just really is something that has to do with my trade, because it's a 10,000 point move from where my average entry is. Again, I'm the first one that's going to admit that is absolutely meaningless, right? What I believe and why I'm getting out there is just a number for me. It really has nothing to do with the chart because we are in clear territory and there is no resistance up here. So I'm just choosing that on half the position. And part of the reason why I'm also choosing that because, as you know, Bitcoin can be very volatile, right? You can always have a move that retraces a lot. And then what happens is if you haven't taken any money off the table, psychologically, it's going to kind of, maybe throw you for a loop. So I've got that actually working here. You can see the working order is here. And those are the two contracts that I said I was doing in my alert because, as I always like to say, I'm an eater of my own cooking. I never say I'm doing something when I'm not doing something. And obviously when I put the trades out live that are the cut and paste from my own account, well, they're cut and paste from my own account. So obviously the trade is already done. Remember, I don't post anything that's a working order. They are only filled orders in all of my alerts to my room. So far so good. You can see it's up a decent amount. It's not a bad trade. But again, we're going for a little bit more. We're going to see if we can get an out at around that 122,000 on the first one. And then again, it's going to be a trailing stop from there to see if we can move over time to about that 148,000, 150,000 target in Bitcoin. Number one draft pick this week is Netflix. As I was saying in the introduction, definitely a stock you've heard of, but you're probably a little bit surprised, as am I guess, a little bit of how weak it is. It's actually been moving down for a while the market's been moving up. We know the market made new all-time highs this week, and yet the stock is moving down. And what's great about this is because this is one of the strongest stocks out there. I think this is even a better stock than any of the AI stuff. I think that this is going to be the last man standing in the streaming wars. And I made kind of a joke, but not really a joke. Earlier today in my room, I said that this is the bread and circuses trade. And that's kind of how I see it. I think that at some point when the entire world turns into that movie Wall-E, who's going to be providing the content for all those screens? I think it's going to be Netflix. And so that being said, the stock is down. But if you look here, there has been no negative news whatsoever. And as a matter of fact, there's also a lot of price target increases here, raising the target up to 1,400, raising to 1,230, raising to 1,350, maintaining overweight, etc. So there's no negative news, and that's a good thing. When you have a strong stock that's catching a spate of selling, but it's not on any news catalyst that tells you that the stock is simply short-term overbought, and you have late to the party Charlies basically getting out of the stock and pairing off a little bit because they probably had bad trade location. And as we know, trade location, much like real estate, is the most important thing, right? So where is the entry point going to be in Netflix, or what should we do? I don't know for sure because there's not really that much technically ahead of us. We could look at here at this prior low. That's a pullback, and it does correlate with a round number. So the 1,200 would probably be one of the first places that I'm looking, which is not a bad area. We'll see if we get down to there. Now over here, if you move your attention over to the left side of the screen, I've marked off and done some simple calculations of where there are declines on a percentage basis of 15%, 20%, and 25%, just so I could see where those are. If we were to get to some of those levels, I think those are levels that people could be active. Now, they are going to report next week, which is going to be interesting. That's going to happen on Thursday after the close. One of the things that could be a play here, personally, I hope that they gap down because I want to see some of these levels be put into play to set up a move. But let's just say that the stock is not necessarily even down on earnings, but just maybe sideways to down, maybe even just flat. You could easily start looking at weekly options for sales at some of these levels. Now, obviously at these lower levels, you're probably not going to get premium for that particular week, that particular weekly option series. You may have to go out 2 to 3 series to get that premium. And that's maybe not a bad thing to think about, right? You've got it right here at the big round number of 1,000. Probably there's going to be some premium there if you go a couple weeks out. But again, it all depends on how low we go on this earnings or over the next, next week, next 3. There's going to be 4 trading sessions essentially before earnings, how close we can get down to some of these levels. And again, obviously, the closer we get, the more those premiums are going to be pumped. So this is like 2 ways to really play it, is that this could be played with put sales to bring in a lot of credit, or it could be played with a directional long when you get to some of these support levels. I think one area that could be interesting is going to be the prior highs here. I kind of look at that always as a breakout level. That to me would be right here. That's the 1165 area. That could be interesting because that's essentially where this rally began. Once it broke here, you see the big body candle here. That's kind of a follow through move, boom, breakout, and then it was just like a slow grind to this all-time high. So I'd be watching that 1165. But any way you slice it, bottom line is this is my number one draft pick because I think we're still in a relatively bullish tape here, and this stock is going to be either a buy or a put sale at some levels lower. As the last official segment of this weekend edition, I wanted to leave you with a little bit of market profile analysis. We don't get into this in every show, but it's something that I do, of course, every single day in my Peter's Pre-Market Perspective newsletter and video. You can check that out at the address here on the screen, shadowtrader.net/PPP. There's also a link in the description below. Something happened this week, and this is why I wanted to kind of end on this because I think it's noteworthy. So quick shout out to my friend Terry Lieberman, who is the creator of this software here, Window Trader, which I've been saying forever is the most elegant solution to market profile. It's absolutely amazing what this software can do and how it lays out everything here. I think it's really nice. And one of the things that, if you recall, I believe I touched upon this in a prior video, but that Terry and I were recently talking, and he was saying that you should pay attention to when there's an island reversal in value areas. So we don't have an island reversal, obviously, in the market, because an island reversal, of course, would be where there is like a candle like this, and another candle might be here, and then you might have like a doji or whatever, you know, up in here. It doesn't have to be a doji, but the fact has to be that the candle body up here has to be completely separate from the highs and lows of these bars. It has to really sit up there on its own, and that's really rare. You don't get that very often. But one thing that you can get now and again is that you can get value areas that are in an island reversal. And I'm going to be the first to say that I don't think this is an overly bearish pattern, but I wanted to leave you with this because it's relatively rare, because we definitely have the island reversal pattern of the value areas, meaning that these value areas here are not touching each other. Notice that this high is here. There's a space here between these two value areas, and then there's an even clearer space between these two value areas. Now, what I think throws a little bit of a wrench into this and makes it not as bearish as it maybe has potential to be is that this high here is just an incremental high. When we made the new all-time high here in the futures, we didn't go all that much higher. So I like to think of any type of big reversal as being something that happens on a definitive high, like when the market goes up, up, up like this, and then you have, for instance, this pattern that makes the island reversal there, and then the next move over time is down. I don't think we really have that in this situation because all we did really here was double top. But I'm mentioning this to you and I'm pointing it out because I believe that it, at the very least, supports my theory that I think the market doesn't go anywhere for the next few days. My theory is that I don't think this high is going to be taken, and I think you need to come sort of off the gas a little bit on equities, maybe go into Bitcoin or Bitcoin related stocks or gold. You know, these things can run on their own, but I think that equities are going to be a little bit quiet here, and at the very least I believe that we will not test that high for next week. So it's going to be interesting to check in with this chart next week and see if I was right about that. For what it's worth, I don't have a bet on really right now other than the Bitcoin trade that I showed you. And I think that this is important because I touched upon this earlier in the program. I was saying how, I eat my own cooking and all my trades in my advisory actually trades that I do. And I was saying that what I really am trying to accomplish with my advisory is keep people on the right side of the trade at all times. And as I was saying, you do that by aligning yourself with the broad market and being more aggressive with more trades when the market is moving and less aggressive with less trades, or maybe even no trades when the market isn't doing much of anything. And right now, the only position we have on officially between me and my subscribers is an MSTR trade, which is a bullish, obviously, play on Bitcoin because MSTR is somewhat of a proxy for Bitcoin. So I don't have any weekly options trades right now that are expiring on July 18th in the next series. And that is kind of noteworthy if you think about it, because again, I'm aligning myself with the market, and we often or usually are never quiet in that manner. I always like to tell people we have plenty of instances where we've got literally 10 trades open, and we'll average 4 to 6 at all times. So this is noteworthy, I think, for me, and it kind of speaks to what I was saying, that I don't think the market's going to go anywhere. But anyway, like I said, let's check in together next Friday. We'll have another weekend edition, and we'll see if I was right or wrong. Basically, it's that simple. I mean, that's trading, right? I could be dead wrong. Monday could be a very, very bullish day, takes this out, makes a new all-time high. But I'm just saying, if we look at this market profile with this island reversal of value areas, it's just another data point that to me speaks to a pause in the markets going forward. And that's essentially my program for today. But always before we go, we take a quick look forward at what's going to be happening in terms of economic data and earnings. Remember, next week is going to be somewhat pivotal, and that is the kickoff to Q2 earnings. I think Netflix is really the official kickoff to that. It used to be Alcoa, but who cares about Alcoa? That's just the first Dow component, I guess, that reports. Netflix is really the first important stock of note that is going to report, and that is going to be on Thursday, as you can see. The economic data is the usual stuff. I think people are going to be paying attention here to these inflation numbers. There was some talk today about Powell potentially resigning, etc. And, the inflation thing really hasn't gone away. It's really kind of still front and center. So we'll see what happens with that. Remember, we still don't have much odds of a cut at the September meeting going forward. So it's really still pushing out to further towards the end of the year. So I think people are going to be looking at these inflation numbers a bit. Thursday, it's always the same. There's always employment data on a Thursday. Housing starts on Friday. And this is the preliminary number for University of Michigan, which is always important. They always do a revised number afterwards. But this first number is really the one that tends to move the market. So keep that in mind. The preliminary University of Michigan sentiment number is going to be on Friday, and it's often a market mover. As far as the earnings is concerned, banks are going to kick it off. They usually do, and that's going to be JP Morgan Chase, Wells Fargo, and Bank of America. They're usually all kind of clustered together over 1 or 2 days. So those bank earnings are going to be coming. Note that those are always pre-market, where tech companies are more aftermarket. So we've got these 4 plus Morgan Stanley between Tuesday and Wednesday. Thursday is Pepsi, which I just put in because it's a big one in the consumer staples space. And of course, all eyes on Netflix. This is really, at least for me, what it's going to be all about. There's potential, and I talked about this a little bit in my weekly options room today. There is a lot of premium in far out of the money puts, which there always is, obviously, because that IV is pumped for the earnings. But you may want to look at some of those levels that I looked at in the number one draft pick section, talking about where we have a 15%, 20%, 25% decline. If you're willing to put the stock at those levels, which you probably will be because that move would happen overnight, and you may open actually below those levels, there's some decent premium down there. So you may want to take a look at the chain for next week for Netflix. And that's my program for this week. Thank you, as always, for spending a little bit of time with me. Quick reminder, if you'd like to trade live with me in my weekly options room, or check out all of the professional traders at ShadowTrader in our other room, which is the Live Trading Suite. Great value there. It's 2 rooms for the price of 1. We've got a stocks and options room and a futures room going all day long. All those links are in the description below. And remember, we are still in partnership with good folks at Tasty Trade, and that Live Trading Suite, you can get 6 months free if you just open an account with them, which is a pretty amazing deal if you think about it. So as far as how I feel about the market going forward, I've given you a bunch of data points showing you technical charts and market profile charts about why I feel that the market may actually be sideways for a little bit. There's a chance that those Netflix earnings are going to be a catalyst of kind of throwing a wrench into things, maybe up or down, we shall see. But that's not till Thursday after the close. And between then, we've got 4 calendar days, 4 weekdays, I should say, of trading. and I don't think the market's going to move all that much in there. Again, I could of course be wrong about that, but there's a lot of push-pull going on in those sectors, as I showed you. Just a lot of data points right now seem to be pointing to the fact that we're probably going to pause in the near future. All right, Bitcoin is moving. I think this is the beginning of a larger breakout, again with an ultimate target somewhere around the 150,000 level, which is obviously going to take some time. So we'll see if that gets there. And beyond that, as I was saying, the number one draft pick, of course, is Netflix, which is going to report on Thursday. But I showed you those levels where we're going to be down 15, 20, 25%. Maybe look to sell some puts there, and we'll see how it goes on Thursday. All right. Make sure you hit the like and subscribe buttons if you can. It really helps out the channel. As always, coming at you from beautiful Los Angeles, California, I wish you good trading and good night.